What's up, traders? It's George here from Edge-Forex, coming off a killer week in the markets. Ready for the inside scoop on our biggest wins and what's coming next? Let's dive in. Last week, we went in strong, strategically picking off opportunities in key Forex pairs, and our approach paid off big time. Across AUD, EUR and USD positions, we landed a solid 190 pips in gains. It wasn't about massive trades, but smart, calculated moves that let us stack up wins across a variety of pairs. It's all about that layered strategy, locking in consistent gains while navigating some pretty turbulent market waters. Now, looking back on last week, we can see the market definitely had some interesting turns. Let's start with the dollar, still holding its strength, pushing upwards despite a quiet week on the economic data front. This strength seems to be riding the shifting US election landscape. It's no secret that with the possibility of Trump securing a second term inching closer, investors are flocking to the dollar as a safe bet. It's likely we'll see this theme stick around as election day creeps up, and depending on how polls shift, we could even see a dollar rally in anticipation. Over in Japan, we're seeing a pivotal election unfold, which added pressure to the yen. The ruling party is holding onto a razor-thin majority and might need a coalition if they want to maintain control. This uncertainty weakened the yen, and with the Bank of Japan expected to keep rates stable, we might see a bit of hawkish language in response. Between the election and the upcoming Bank of Japan meeting, there's a chance the yen could see more volatility if the central bank hints at any policy tweaks. Europe wasn't quiet either. The euro slid down a bit, with concerns about slowing growth and inflation coming in just under target. Rumour has it the ECB might lean into a 50 basis point cut at their December meeting, which could nudge EUR/USD lower. A lot of this depends on how inflation numbers come in next week, and any sign of weaker growth will probably fuel further euro weakness. Meanwhile, the Bank of Canada joined the cut club, with a 50 basis points cut last week as they work to stabilise their slowing economy. We could see them follow up with another 50 basis points in December if growth doesn't pick up. First up, we're keeping a close eye on US payrolls data, which has the power to move the markets in a big way, especially with the election so close. Numbers are expected to be around the 100K mark, which would be the lowest we've seen since 2020. The trick here is that two hurricanes recently hit the US, so don't be surprised if we see some messy numbers. Underneath, though, we believe the trend is still toward a softer landing for the labour market. Next, we're looking at key CPI data releases from Europe and Australia. The RBA has been cautious on rates, and unless inflation plummets, rate cuts in Australia probably won't happen until next year. Meanwhile, Eurozone inflation numbers will influence the ECB's stance on whether a December cut is in the cards. Keep an eye on EUR/USD, as any dovish move by the ECB could push the euro lower against the dollar. One last curveball this week: Japan's election could impact the yen's movements depending on how the ruling party fares. And for our European friends, just a heads up that the US won't adjust their clocks until next weekend, so expect US data to roll out an hour early compared to normal. So that's the game plan. And hey, if you're not already with us, join the crew on Discord at Edge.Forex. We're sharing real trades, insights and more. No frills, just straight up trading strategy. Until next time, keep trading smart, and I'll see you in the markets.